So if you can see my screen, on the screen we have our economic calendar, the major news that we have for the week. Tomorrow being on a Monday, we have a bank holiday for the Canadian dollar. So, and we really don't have anything else in terms of the dollar. Of course, every single day we have high impact. I mean, we have the low risk and also the medium risk fundamentals that are being updated every single day. So that's why, okay, for me, I really focus so much. So you can always customize when you apply the filters, you realize that you're going to have a lot of news. Tomorrow on Monday, we have all these midterm. So as a day trader, you need to also have a consideration of checking on what you have. These are some of the things that sometimes causes some movement, or rather some reactions in the market. But I dwell so much on high impact news. I dwell so much on high impact news because that's what really drives the market. All right. So tomorrow being a Monday, we have a bank holiday for the Canadian dollar. Then on Tuesday, we're going to have some major important economic data being released. That is on the Australian dollar and also the Canadian dollar. For the Australian dollar, around 7:30 Kenyan time in the morning, we're going to have the cash rate. So this will be having an impact on all the Audi pairs. All right. So guys, in case I have an issue with my internet, just let me know. All right, using the chat section. Then on the same day, we're going to have during the New York session, that is 8:30 a.m. New York time, 3:30 p.m. Kenyan time. We'll be having CPI for the Canadian dollar. Then on Wednesday, during the London session at 9 a.m., we're going to have CPI for the pound. Then on Thursday, we're going to be having, I think I'll be avoiding to trade this day, Thursday. On Thursday, we're going to be having Euro PMI. We'll also be having Pound PMI, and we shall be having later on during the New York session, we're going to have unemployment claims and flash service PMI for the dollar. Then we're going to wrap up our week on Friday with the retail sales during the London session on the pound. And then during the New York session, we're going to have retail sales for the Canadian dollar. Right? I hope you guys can hear me. Someone to confirm if you're still together. Perfect. Now, that is from the fundamental point of view on what we have on our economic calendar. I'm going to post these on Discord. So on the technical part of price, on the technical part, or from the technical point of view, first you're going to first of all check on the dollar. From the previous weeks, we've been looking at, like if you look at this month, the monthly candlestick is bullish. If you go to the, you coordinate to the daily time frame, you can see what is happening. Price is trying to build up liquidities as the market is going up. So probably there might be a likelihood of price going all the way to this point before we continue maybe selling up further. But remember, there's this one down here that has not been touched. We take it on 4 hours. So if you use the weekly time frame, if you check on the weekly time frame, we're gonna have a pullback for price to come to this area. So that means we might be still expecting some slight push up for the dollar all the way maybe to this price level of around 103.8 level. That's like a percentage group pump of around things around 2.5, something 2.7, 2.5 there. That's what you'll be having. That is a long-term projection. So, this is going to be taking a couple of days to go here. But now, when you're checking on the recent reaction for this coming week, of course, you're going to be, if you check on the daily time frame, this is the structure we have. Price is reacting from this impure liquidity, or rather the flip area. You use the 4 hours. That's the structure that we have. That's the structure that we have. If you confirm also on 1 hour, that's what we have. So probably the market might be maybe pushing up further Of course, we'll have a slight reaction to the downside. Then later on, the market will be pushing up. So I'm still bullish on the dollar. That is my point of view. Still bullish on the dollar. So we need to wait for the market to open and they'll be able to. So if you check on the last, that is on Friday candlestick, it was bullish. If you check on last week candlestick, it was bullish. Down here, we have a type of liquidity we call type 5. The market came, tapped it. Then if you use 1 hour to affirm that, hold on just a moment. I'm going to show you something. This is the daily candlestick. But if you look at it keenly, the body candlestick has not closed above the previous day's candlestick. That was on Thursday. All right. So if you go back to 1 hour, it clearly tells you probably the market might be coming down and react on these structures. If you look at this keenly, we have some sort of liquidity engineering here. All right. So price might be coming down to this area, maybe before continue pushing up. So whenever you see that, means pairs like EURUSD, GBPUSD will be doing the opposite of this. Market will push up, then maybe continue with the bearish direction. Are we together? Citizens, Kenyans, are we together? So something of the sort. There's also a possibility of price reacting on this pure, this is what we call pure bullish. This particular area that we're in, there's a possibility of the market just reacting from here and pushing up. Because already, if you look at this high, it's already been, we have body closure above it. So the market might react from this flip level, or rather we call it a pure bullish level, and continue the direction. So those are the two possibilities. But as far as I'm concerned, I expect probably price to come deep into this area of liquidity and push all the way to the upside. That's what I have on the dollar. Now, if I look at, I'll look at a few currency pairs and then I'll talk about gold. I will also be giving other traders a chance to share what they have in mind. So I think before I jump into other pairs, I can give Leonard. Mr. Leonard, are you in the meeting?
Yes.
Maybe I can give you some tidbits, share what you have on the watch list.
Okay.
All right, let me stop sharing my screen and then you can take over. And then after Leonard, we're going to have, let me see. Oh, Mr. Kim. Aris is going to be also sharing what he has on the on his watch list. Then later on, I'll be summarizing. I think that would be the easiest way so that we don't spend so much. So you can go on, Mr. Gbpjpy.
Yeah. I believe my screen is visible. Someone to confirm.
Yes, from my end, your screen is visible.
Okay.
Other people, other guys, you can also confirm from your end if you can see Gbpjpy's screen. Okay, perfect. You can proceed.
All right. So I'm looking at Gbpjpy on the daily. This is a daily time frame. We've been seeing it making some higher highs, higher lows, and right here we are having a pullback. So I want to get to a lower time frame, like a daily. I mean, from daily to 1 hour. Someone is drawing my screen. So on our 1 hour time frame, remember we've seen daily, it is actually making a pullback, which is a short time downtrend before we continue having an uptrend. So now remember, we're looking at the USD being bullish for the long term. And so it's right now making a pullback, a short time retracement before a continuation. So because Gbpjpy is correlated to Usdjpy, so we're likely to have also a pullback plus a downtrend as we've seen before a continuation. So if this thing is going to maybe continue being bullish, then we're likely to actually sell from this point. This is an engineering on look at this time frame. Let me go back to, I think, 2 hours. Yeah, there is an engineering at this level, and then we have a transition of a transition. So we're likely going to look for, but we are going to have a bullish move before we actually get a reaction from here, and we may be bearish for a short while. So on this was on Friday, we had a reaction around here. There was something which we can actually get to look at. Why did we have a reaction around here? I think there was kind of on lower time frame, I saw an engineering. And that's what gave us a reaction from here. So for tomorrow, we're likely going to have maybe a retest of this area, and then we can actually look for sales from this point. That's what I'm looking at. And if prices are going to drop below, then I'm actually looking for a reaction from this reactive engineering at around 190, 928. Or if not, we may go to 194.54. So those are the areas I'm looking for reactions. But the nearest ones I'm looking at is it's going to maybe come to this point we can actually sell. And if not, maybe we look for this lower side. So again, and apart from that one, we can look at Usdjpy.
Okay, before you proceed, I'm glad that you have a similar setup that I shared on, I think it was on Friday. The exact zone that you're looking for sales on GJ. It's also a zone that I refined and I narrowed down to that structure that we have there, which is a type, I think it's more of type 1. And also
This one?
yes, so there's that entry. So that means our highlights for GJ will be looking to sell from that particular point, depending on how price will be opening tomorrow. The market might decide to open and continue selling, massively. But
Sure.
if price will be retracing all the way to that zone of around 195, then it will be a perfect zone for us to get some nice sales that will give us a very good RR. Can go on.
Yeah. Okay. So guys, note this is the type 1 response is mentioning. So it is around 195,907. Yeah. Let's look at Usdjpy. Starting from daily. Starting from daily. See, it is the same case. Making higher highs and higher lows. So from where we are right now, we may have we may have a short time buy, or maybe we're going to have a buy before actually we can have a sell. And if not, we may look for reactions from here. You see, there was a weak overlap at this point. So let's try see from a lower time frame like the 1 hour. 1 hour. On 1 hour, there is so if we're looking at 1 hour, there is this extreme high, and then there is this and this that area of liquidity around here. So if we start from the highest, this higher point, we could be looking at maybe reactions around. First of all, it is important we see the types of liquidities we are having on such areas. looking at this point, guys, there is no clear type of liquidity on this area. If we look at 4 hours, 4 hours still isn't clear. We don't have any clear type of liquidity, but we have a formation here. We have a formation, and we also have this other formation. So if I look at the issue of engineering, I can see there is an engineering on 1 hour. So if prices will come to the extreme, just the way we're looking at prices coming to this extreme high on GBP, JBY. Same case may happen on USD JBY. Maybe we're going to actually look for entries from this area or maybe this point. If it's going to actually be bullish on from the start of tomorrow, then we will need to look at if we can have reaction from this engineering or this failed engineering at this point. Yeah, so we may look for reaction from that area or maybe this other extreme high. So those are the areas I'm looking at if it's going to buy. And if not, we have this inside formation. Remember, there is been a transition around here and prices went up and then it left this unmitigated formation. Remember, this area has been mitigated. Even the engineering that we are having at this point has been tested already. So we don't have, we may not actually have prices coming to this point, but we have this untested area. This is the last area that gave us the impulsive move. So we need to see how prices are actually going to react to that area. And remember, this one has been tested already. And we have this point, which is kind of looks like a type 1. But remember, guys, when we have double areas of liquidity, we need to focus on the extreme. So this is our extreme area, and that's where we're looking for buys if it's going to actually give us a bearish move before bullish. So we look for this area. And if it's going to react from the other side, we look for this first, this formation, or maybe the extreme, where we have an engineering. So take note of this lower area and maybe this upper area. So that is what I have as at now. So back to you, Espon, so that we can have the next presenter continuing with something else. Thank you.
All right, thank you so much. Mr. Harris, you can as well.
Yes.
If you can hear
Thank
me.
you, Leonard. Let me now share what I have for today. I hope I am audible.
Yes, we can hear you.
You can see my screen.
Yes.
Let me move this. Okay. Minutes. So let me move this. So I'll just share on USD card, AUDUSD. I think Hesbon has concluded on what we expect the dollar. We'll just share something on the same, just briefly. On the dollar, we're still bullish on the same. You can see price has been breaking structure on the upside. We have closed above 100 levels. So as Hesbon said, I had the same sentiment. We look for it to, there's an imbalance here to be mitigated. So we look to price to tap around 103.66, 630 level, 103 levels to fill this imbalance. We see how price will react at this zone so that we can either continue selling or buying. But this pump on the dollar has been brought about by I think the US China trade deals that were the pause on the trade was for the 90 days. I think that's when we start to see the advent of the dollar pump. But before that, obviously, as you can see, technically, as price, I think Esbon talked about price coming back to this formation here. My tools, just a minute. I think before we see a pump to the upside, the dollar is likely to retrace for some time to mitigate this zone here so that we can continue seeing a bullish dollar. Also, we have a nice trend line technically. So we'll see where price will, if we tap this zone so that we can continue buying hypothetically. But on the hindsight, we are still bullish on the dollar. So subsequent to the pairs that we focus on, I'll talk about AUD/USD. Also, I've seen we have some interest rate news on the same. On the long run, for the last 2 months of the last quarter, we have been bullish on the same, but it started after the dollar strength. I can see we got some sales on the AUD/USD last week.
I can see
Yes.
someone is, Peter is saying that the screen has not loaded. Maybe you can check from your end, Peter, if it's your internet, because me, I can see the screen. Other guys on the chat section, confirm if you can see Harry's screen.
Let me see my screen. I'm sharing AUD/USD.
Other members,
No,
kindly do that.
Okay. So last week we had a nice buy on the same AUD/USD, and then we got some sales midweek. I think this Gbpusd terms, he calls it ping pong entries. I think we managed to get that nice setup. I think I shared it with my group, but on hindsight, we're still bullish on the AUD/USD on the long term. But after the dollar strength coming up, you can see we are getting some nice bearish setups. On the same this week, we're still bearish on the AUD/USD, but targeting lower areas of liquidity down here. We had a type 1, I think we had a type 1 down here, which I'm waiting to be mitigated so that I can continue buying the upside. But for the meantime, we're still bearish on the AUD/USD. We had a nice setup last week. I think closed around 3% on the same. Yeah, I think but though I was out of after 3R, realizing 3R on the setup, I think I got out and allowed the market to run. But tomorrow, I'm still seeing a potential setup on the same because we have a flip zone around here, and we also have a type 1 here on the 1 hour. So likelihood, if we get a push to the upside, I'm likely to look for sales on the flip zone in line with the dollar strength on the AUD/USD. But we are targeting lower areas of liquidity down here. You look on the higher time frame, the AUD/USD is in a range. We are likely like selling at the top of the range, buying at the bottom until you get a clear trend of the same. This is just a range here. So we are selling at the top, buying at the bottom. But for now, for intraday opportunities, we'll be looking for sell opportunities on the Australian dollar against the dollar. And also, we'll also wait for the interest rate decision on the Australian dollar on Tuesday morning. The data is showcasing that we're likely to cut interest rates on the AUD/USD. So maybe the dollar might be strengthening to their downside, but that's just speculation on the investing.com. But we'll see. But for now, for intraday opportunities, we're looking for sales on the same. For USD CAD, USD CAD, I can say has not been very good to us, but we're still managing and pushing because I had a very nice opportunity here. Type 1 liquidity, this formation down around here, but I think price that area, but price came and liquidated us, peak liquidity, this formation here, and then bought. So, oh my God, the internet is unstable. On the same, I'll be looking for buys on the USD CAD, but on this zone down here, still, I believe this area has been liquidated, or liquidity consumption has already occurred around this area. So I'll not be very, very fast in looking for buys on this until get price action comes to this zone, because we have a type 1 liquidity down here on the same. But if I get sell opportunities at this zone, I'll look for sells as we wait for the pullback of the dollar before we wait for that push to the upside. So USD card, I can say we're still skeptical on it, no clear opportunity, but on the long term, we're still bullish on the USD card. Lastly, maybe let me comment on GJ, because I saw we are having almost a similar setup on the same. I think maybe turn to 1 hour. I think Hesbon, as we have marked that zone, I also had marked it. That area have a nice type 1 liquidity around that zone. I think on the 15 minutes, I had already marked my entries. Let me share. Yeah, I already marked something like that. I was actually waiting for that setup on this one on Wednesday, but price don't come to my area, so still marked it, left it there. So I'm likely to look for sell opportunities at that zone on GJ. On the buys, maybe something contrary to maybe what Leonard has said. Still, this area from the original buy we took the other week down here, I can see there's a lot of liquidity consumption that took place here, So on my end, I'm likely to look for buys at this zone here, because according to my analysis, I'm seeing this area has not the liquidity has not been consumed at this area. So I'm likely to look for buyers opportunity at that zone, push to the upside, and then look for sales up there out this zone that I've marked. But this will be determined how price action will open tomorrow and how the week will unfold. But across, I think the Japanese yen has been strong across, even for CHF, JPY, CAD JPY. I think there was some setups last week. People were taking on CAD JPY. And also I took some on CHF JPY. So I think if you get nice opportunities on the other minor pairs and you see maybe there's a pair that is dominant or is strong in that week, you can jump on other pairs, apply risk, proper risk management, just use the same concepts and you'll get your nice pips. So for me, JJ, I'll be looking to look for buys at that zone and sales at that zone. I think these sales will be updating each other in the communities so that price action comes to that area, we'll look for opportunities. So this one will be a very nice swing position to the downside, because if history is to be counted, I think area 1 liquidities turn out to be very strong setups that can fold. So on the stock market, we are still very bullish, no clear opportunities on the same. I think on the stock market and on also BTC, the stocks and the cryptos, we are quite bullish. So no clear opportunities on my end there. So I'll stop at that point. I think Basweti, you can comment on gold and other pairs. I think last week I saw you are doing something on GBP and ZD, on the ZD pairs. So thank you. Back to you, Basweti.
Thank you so much, Aris. So, guys, that's amazing. So I want to also spend a few minutes to highlight other pairs, but I want also to make some major important updates, guys. Trading is very easy. You know, when I say that, other people are like, what do you mean? Trading is very easy. You don't need to complicate anything. And that comes with, once you master the skill of trading and understanding how to view the market from the fundamental point of view, also aligning it with the technicals, at the end of the day, you realize that you don't need to chase the market. You have to wait for price to come to your areas of interest, apply your entry techniques, execute your trades with proper risk management, and then you're done. The hardest thing that many people get a challenge with is the aspect of waiting. Not everyone can be patient. Someone might be chasing the market every day because they just want to trade. You see, like, for example, you realize that most of our trades when you analyze them, other setups you realize they mature on Tuesday, others Wednesday, others Thursday, and so on and so forth. So once you master the thing of patience, trust me, you're going to have a nice experience when it comes to trading. So I'm going to talk about EURUSD. I'll give an update also on GU, and then I will also talk about the NSD pairs, and then I'll finally talk about gold. So let's start with the EURUSD. Let's start with the euro dollar, EURUSD. I'm supposed to share my screen. Just a moment. I believe you guys can see my screen, right? And someone to confirm if my screen is visible. All right, perfect. So, Euro USD. Now that we understand that the long term is that we're gonna be bullish on dollar. So we also need to use the same ideology to know the direction of the USD quotes, right? So there's this setup that we had the other week or during the morning sessions whereby we're looking for sales. I saw a couple of traders, they got these. We are, by now, I believe we are at 7R, yeah. And our main target is around this. This is our first target. There's a possibility of actually Euro USD going all the way to the downside, whereby we're going to get our buys around here. I'm going to talk about that. So from the monthly point of view, price reacted on this area, and we have had body candlestick not closing above that. So that tells me that this invalidation point and validation point still quantifies or approves that we're going to have, the reaction is happening because of it's a major price zone or a key point on a higher time frame. So price is coming back to consume liquidity on where we have sub areas of liquidity, like for example, we have this week overlap, which is seen as a structure on the daily time frame. You go to the daily time frame, right? So if you go to the daily time frame, we have a area of liquidity where we also have validation and invalidation points. So that's why we have that reaction. So from the daily point of view, Eric Thuo, what's wrong with you, my brother? You can see you are drawing on the screen. Eh? Okay, let me delete these. Okay, so if you look at the daily time frame, price had already done, sorry, price had already done a shift at this particular point. Price did a shift at this particular point. This was the lowest price level, and then this was the immediate high, and then the extreme high. Look at this, price traded above this, but when the market came down, you could see we had impulsive move to the downside. As the market was going to the downside, the last area that we had, or our immediate area of liquidity that we had, this is how I did the refinement to get that sell. We had this, we'll say this is an outside formation, which is a type 5 area of liquidity. I'm talking about this particular zone, right? Talking about this particular zone. So if you do the time frame coordination and price movement, you know how we got the entry. Remember when we were doing our analysis, price was at this area. And now that's why I'm saying that trading is very simple. It's just waiting. Price came all the way to our entry level. When we did our refinement on 15 minutes, that's where we got the sell. The stop, I mean the sell idea. The stop loss was at around 15, 16 pips there. Then the market is delivering that manner. So on the same, if you look at how last week candlestick closed, there is a re-entry that you are anticipating. That's 1 hour. A re-entry that you're anticipating somewhere here, but now the market has already created, or the market has already closed below this zone, which means if the price will pull back, it's going to get re-entries from this. So I want to teach you guys one secret. When you're looking for continuational, once you understand the direction of that particular trend, when you're looking for continuational trends, what you do, continuational trends, what you do, for example, in this scenario, if you look at the daily time frame, clearly you'll see that this candlestick, that was Thursday candlestick, price went up, and then if you look at the body and this candlestick, the Friday candlestick, it has already closed below Friday's lowest point. So that means you need to look for the first situational time frame in this case, which is 1 hour. You need to look for some areas of liquidity within this area that has not been consumed for you to get continuational trend to the direction where we know all these are pullback. The sales is a pullback before we continue going with this bullish move. So when you go to the 1 hour time frame, you can even use the 4 hours because clearly when you check on the weekly, we are strongly bearish. So if you use 4 hours to confirm that, you need to look at the 4 hour structure. Already on the 4 hour structure, price has already traded below this zone, and we could say this is our invalidation point, and then this is our validation point, right? And it's aligning actually with the daily structure. So if I go to 1 hour, since I was focusing on the daily time frame, I can see very well that we have we have this structure here. We have that structure that had we have that structure, that particular point, and the market price first of all took this low. Okay, price took this high and then came down and took this low. So that is an indication that we're going to be having a flip around this zone. So that tells us we can focus on having our re-entries for more sales at this particular liquidity engineering. Okay, so you can look for sales, more sales within these price points. You know, you can look for sales here to keep you pushing to the downside. So, but if I narrow down to our areas of liquidity, I can see we have a type 5 here. You go to 15 minutes. I'm just showing you how to get continuational push. Go to 15 minutes. Of course, our validation and invalidation point. So these will be more of intraday continuational sales. I can go to 15 minutes. On 15 minutes within that zone, I can clearly see that we have, okay, let me see. We have this area. So that is liquidity engineering with also a type 5. So if you look at the stop loss, it's around how many pips? That's like 6 pips. So you can make it even to be 20 so that you look at that high and then you take your cells. And those cells will be continuing to do what? Will be aiming. This will be your first, if you're going to get those entries, this is going to be your first take profit around here. Then this one here, that's already another RR of 1 to 4. But remember, our ultimate goal is to go all the way. Our ultimate goal is to go all the way to the downside, whereby, let me show you, we're going to get buys either on these around 1.07905 or these extreme points. So our ultimate goal is to come down here. So the difference between you, me, and other traders is patience. So you need to understand what is happening so that you take trades based on the market price action that is being printed. So that's what I have on Euro USD. Are we guys following? Are you guys following? Are we all together? You can see we are 31. I need to know if you guys are following. Kindly comment on the chat section. You know, sometimes when there's silence, you might be making noise and maybe even guys are not here. All right, perfect. So that is on Euro USD. So since we are expecting dollar to push up, then we're gonna be continuing selling. Gonna continue selling to the downside. So that's what I have on Euro USD. So I had a trade on just a moment. I had a trade on Gbpjpy USD, but my entry was not triggered. In fact, I even forgot to share this on was it Discord? There's this trade that I had around here. The market went without triggering I think I did a lot of, but there's a likelihood of market still coming there. Price didn't trigger my entry, and it has already done around 120 pips. That's almost an RR of 1 to 7 if I minus the stop loss that I have, which I mean the missed trade. I missed it by around 12 pips. So the point that I want you guys to understand from the daily time frame, since we are looking at the monthly, price already is reacting on this. We call this pure bullish on the daily. So whatever is happening is the market. You expect probably price to continue. You expect probably price to continue coming to the downside, to come and react on this area of liquidity. You see, this is all area of liquidity. All right. If you check on the monthly time frame, probably you'll see we have some sort of weak overlaps. Let's confirm on weekly. Yes, on weekly we have this type 5 that has not been mitigated. On monthly, it confirms to you we have a weak overlap, which is seen as an area of liquidity on the monthly minutes formation of the day. Guys, there's a thing that I want you to understand. As much as we know directional wise we are going to this area or this point, it is not always that, for example, if EURUSD selling, GBPUSD selling, you just sell anyhow. You need to get best areas of selling, because on the other hand, this is monthly. This is a key price point, because in this monthly candlestick has not closed above, and the week has just reacted. But if you go maybe to daily, you will see, let me show you. If you go to daily, you realize that there is a body closure above this, but again to the downside, there is a body closure below this. So which means the market, before price continues with the higher time frame or the constant time frame, the direction, it has to consume areas of liquidity that are left on the situational time frame before it continues with the trend. That's why I'm expecting once price comes down here, consumes all the liquidity, it will continue pushing up further. That means it will also be aligning with what is coming on the dollar. But remember, that's why we are trading in a very risky market. It doesn't mean that it will be here for a long time. Next week, anything can happen on those economies that you're trading, and the sentiments, everything can change. So that's why, as a trader, every single day, you need to be updated on what is happening. But the thing is, once you understand what is happening on higher time frame and the main pro trend or the true trend, you know how to take advantage of those moves. So that is also on GBPUSD. I think I can talk about, I can also highlight something on pound NSD. Then I'll talk about gold. I hope you guys are getting it. Let's look at pound NSD. We have some swings here. So on pound NSD, we already had our analysis. If you check on the monthly time frame, from the higher time frame, price reacted on this. This is a monthly area of liquidity, which is a type 5. And it went and reacted on the daily area of on the liquidity engineering that was on the daily time frame. And we can clearly see that the two, you see this red line and this one, where I have validation and validation point. We still expect price to come and consume enough liquidity here before it goes maybe to the up direction. But as far as I'm concerned, if you go to the daily, because now you're looking at the monthly time frame, if you go to the daily time frame, price came to react on this. We call this now from the daily time frame. We call this pure bearish. I mean pure bullish. It's like a flip. It's pure. It's a key zone. We have impure liquidity here. You see this? It's called resistance. See these resistance levels. Let me just circle there. Price was being rejected here. Then the market created an impulsive move. When the market pulled back, it came to react exactly on where we had resistance. All right. And then now the market is going up. How do you get a confirmation? In fact, right now the market has given us enough confirmation. There was a shift or a transition. Then price is now closed above this area. If you look at the body, so probably the market will come, this liquidity, consume it, and then do what? Continue pushing up. Our main goal or our main area of interest is price to come inside here, give us a confirmation, and then now maybe drop all the way to this zone. We continue going up, or we continue going down. I hope that is clear. There's nothing complicated. You can see the structures clearly, especially those guys who understand our method of trading. If you're trading something else like ICT, there are things you might not have the similar view, but maybe to help those guys also who are trading ICT, because I have an idea of how it goes. So on the daily time frame, we have an order block here then, right? This is an order block. simple price action. This is a bearish engulfing candlestick. For us, this is type 1 area of liquidity, right? From the downside, we have, okay. So this is where we'll be interested to sell. So my view on Gbpusd is price to come in here on the order block, then maybe react, come down. Are we together? So that's what I have on Gbpusd. So even if you check on the 4 hours time frame, you can clearly see that price has already done a break of structure at this particular point. Then down here you can see we have let me see, we have this inside formation shift. So I expect probably for continuational buys, price to come to this, because I can see we have a very nice flip at this area. Liquidity engineering failed. So when the market comes down, we expect probably price to drop to this particular area. Let me show you. Expect price to drop to this area, give us a confirmation, then we continue pushing up. So that simply means for the intradays, we'll be interested to look for continuational buys from this area, and maybe your first take profit will be going. This will be your first take profit as you go on based on the start. So guys, learn to trade with confirmation. Don't just chase the market, all right? Don't chase the market. Just trade with confirmation. But sometimes you can take those risky trades as long as you have an idea of what you're doing. So that is on Gbpusd. So finally, let me talk about gold. I don't want to be here for long. It's already 9. I'll spend the next like 10 minutes to talk about gold. I hope you guys are still following. Confirm on the chat section. Gold. Gold is my favorite girlfriend. Oh, gold is my favorite pair. Sorry for that. Gold is my favorite trading pair. Forex. Though imeteleza, poleni kwenda kwangu. I have some running trades. I hope the market doesn't open with the gap against me. It will finish me anyway. So on gold, I want you guys to look at, as a trader, you should view things, you should have eyes all over. That's what I mean. You need to understand why this and that is happening, and what are the possibility, and what percentage of possibility do you have that this or that will happen. So having said that, just a moment. Okay, having said that, number one, from the monthly perspective, the reason as why on, was it on, let me just check out. The reason as why on Thursday, that was on 15th, I think a few days ago, why price came to react at this particular point from higher time frame. Clearly, you can see gold is very bullish. Gold is very, very, very bullish. So the market came and reacted on what we call a sub area of liquidity, which is weak overlaps. You see this one? We call it weak overlap. And it's also the previous month opening price. Are we together? That's why gold, when gold was selling, I remember that some people I told that once the market comes here, let's look for buys. Are we together? Guys, don't trade blindly. Understand? Don't just be that person who just chase the market. You just trading. Understand what is happening. All right. Have things that you consider before you take any action in the market. So we had a weak overlap here. If you go to the daily time frame, it was a very powerful and a very strong flip, because it was a failed liquidity engineering. If you look at your structure very well, this high was taken out by this, then the market took the low. Talking about this, the market took out this high, and then later on it took this low. So from the daily perspective, we expected when this market was coming back, we expected probably a reaction at this area, and then the market continue selling to the next area of liquidity. But what happened? Because the momentum or the bulls were very strong, price went all the way up and traded above this. There's a statement that I keep on saying, that any failed bullish setup is the best bearish setup and vice versa. Kindly, there's someone who is making noise. If you're coming to the meeting and you're not supposed to talk, have your mic muted. When you want to talk, raise up your hand or use the chat section. Now, so when price was coming there, we could see a very powerful reaction daily time frame. Since it was a failed liquidity engineering, it was a very powerful flip. And that's why price came and reacted at 3124.6. I shared this entry a month ago. I even shared on our page on Instagram. So those who are keen, they were able to take these 1,200 pips from this particular area. I was able to take those trades. Price went all the way to around 1,200 pips. So if you had a very nice account, even with a lot size of 0.1, that was $1,200. A lot size of 1, that is 12,000. A lot size of 10, that's $120,000, more than 15 million Kenyan shillings. That's how people make money. Nothing complicated. Just know what you're doing, what you're looking for. Let the market come to your area of interest, your entry technique, apply risk management, and execute the trade. Collins, you're making noise. Simple etiquette. Just have your mic muted there. Okay. Now, right now, we still have this liquidity engineering on daily, but hold on. Just I want to show you something. Yeah? On weekly time frame, this is an area of liquidity that has not been consumed. So I could say this is type 1. Let me make it a bit thicker. This is type 1. And this is our validation and invalidation point, this way. So just know that as much as what is happening from the weekly time frame, already we have had a body closure below the other week. So there's a likelihood of maybe the market doing what? Coming all the way inside this area, do consumption, right? Then continue pushing. That is a possibility altogether from the weekly time frame. So if you use that and you go to 4 hours time frame coordination and movement, you realize that inside the 4 hours, area of liquidity, where we have our validation and invalidation point, what do we have? We had this transitioning that was happening here, and down here we have this area of liquidity, which is also a type. So we're going to focus on this particular area. So make sure you mark this point. We don't know when it will happen, but trust me, once price comes here at around 29.85, if you go down to 30 minutes and you refine that area, I'm pretty sure we'll be having a very nice reaction here, maybe the upside. That could be even giving you like 2,000 pips. Let me show you. But I'll be keen to watch those price levels. So as a trader, you should understand. In fact, at that particular area on 30 minutes, I have what we call impure liquidity, right? And below it, I have liquidity engineering, reactive liquidity engineering. So probably once the market will be coming to this area, I'll be interested to look for buys, right? Maybe get even to 1,500 pips or even 2,000. That's a point to note. But basing on the current structures that we have and what you expect this coming week, I hope you guys are still following keenly on the screen. So on the weekly time frame, I need confirmations on the chart that you guys are following. On the weekly time frame, if we will continue selling, probably to come down to that area. First of all, since price formed the new high, the market has not had any body candlestick closure above 33.57 on the weekly time frame. But now I have this invalidation point on weekly, and I have this validation point that is for the weekly time frame. All right. Now, so for me to get continuational sales, I expect probably price to come inside this area for me to do what? To look for sales. I'm going to show you that. And since we have had also a body on the daily time frame, let me show you. Remember, this is a weekly key area. If you go to the daily time frame, once price reacted on this flip, we've had a body candlestick closure above this lowest point and also this one. All right. Now, when I'm on the daily time frame, inside the weekly area of liquidity, I want you to understand this. This is very important. Take note of this. Before the market continue with the direction of weekly, if there is any left area of liquidity it has to be consumed for price to have enough momentum to push to the direction of maybe the pro direction. In this case, I'm saying for us to continue selling, we probably expect price to come into this daily area of liquidity that is left here. Hold on. So I expect price to come and consume this daily area of liquidity. Maybe if it will want to sell, for it to continue selling. So once we have that, that simply means initially when the market was selling, we also had this validation and invalidation point. So the other week, price pushed up. Then the last week, the last few days, or I think was it on Friday, the market sold massively. So that simply means using proper time frame coordination and movement. If I go to 4 hours time frame, number one, I can clearly see. Let me remove. So the two thick black lines represents the validation and invalidation for the weekly. Inside it, we have these, I can say this structure has been consumed by this pullback, but this validation and invalidation point has not been consumed. We also have this minor structure here at around 32.74. Maybe that will be also another area we expect a reaction. So having said that, from a technical point of view, unless what comes is in terms of fundamentals surprises us, anything can always happen in gold, right? So price has to come here, consume this area of liquidity on the daily before maybe it validates the weekly interest, all right? So now that simply means, let me remove these lines for confusion. You see price reacted on that key level for weekly and it sold. If I narrow down to this other time frame, like 1 hour, you can clearly see that price had already done transition, right? We have body candlestick closure above these. We also have this area. Then the market was trying to come down for this area of liquidity, which is on 1 hour. That is an inside formation shift, a transition with this inside formation, but price really didn't touch on this. So there are two possibilities. Where price is at right now on 1 hour, once the market opened, these are flipped. If you narrow down to 30 minutes, 5 minutes, you'll see that there's a possibility of price reacting from this area and sell to this before it goes up. That is scenario number one. Scenario number two, since this was an impulsive move that has taken out this high, and also body candlestick has also closed on this, there's a possibility this was a slight pullback before the market continue pushing up. So we might have market continue pushing up all the way to the daily area of liquidity where we have our validation and invalidation point, maybe before we go down or even we go higher and then we come down. That is the a possibility that what we expect. So now this is where when it comes to gold, you really need to be very sharp and be fast based on what you're looking for. So if I focus on 15 minutes, why price reacted here? We had some sort of impure liquidity. And if you look at this area, price has also done some transitions, pushing up further. So I'm expecting, for me, I'm expecting the market to keep pushing up, probably to 30. Okay, hold on. Below the daily area of liquidity that we are anticipating, we have this type 5. So this is my first area of interest for price maybe to push to for the bulls. So I'm expecting probably price to push up. That is like around 700 pips, 770. Then we'll expect a reaction. That's what I'm expecting. But when you're trading gold, remember gold is one of those volatile pairs to trade. So you need to be very careful. Don't trade it howly. Just know what you are. There's something I'm creating on gold. Once I'm done with it, with the experience and all the back tests and the case studies that I've come up with, I'll be teaching you guys on the same. So I think that's what I'll say on gold, unless there's a question or someone who has maybe a different view or I know I've said a lot of things. If you have the eyes and the ease. You heard what I said. You need to take the trade based on what your interest. So this is my major highlight. This is the daily area of liquidity, a type 5. So I expect price to come there. For the people, ICT people, there's a fair value gap here. There's an imbalance. Let me show you. There's an imbalance here. So maybe the market has to come and I don't know. But as far as I'm concerned on how I trade, probably I'm expecting the market to come deep to this area for me to see if I'll get a confirmation to sell. If not so, this move, because it's a daily key zone, which was a powerful flip, which is a monthly opening price, will still be a chance for price to come and go to the 3,700 or even break above the 35. So that's a possibility. So I think up to that point, I'm done. Unless there's a question from you guys, feel free before we end this session tonight. Anyone with a question? Or anything to add on? Or anything that no, there's no one is poor. I'm just joking. Don't take my statement serious. I'm just joking. But the thing is, guys, what I'm trying to say is, as a trader, thank you so much, Ngala. As a trader, one of the most important things that you need to focus on, as much as whichever strategy you're trading, make sure your risk to reward makes sense. Try to, every single day as you're learning, make sure your risk to reward ratio makes sense. Don't have a stop loss of 90 pips with a take profit of, okay, you can still make money, but try to reduce the risk so that you can have, even in business, you cannot invest 1 million and you want to be making 1,000 per month. That is bullshit. You need to, if you're investing 1 million, at least make something that is making sense. In short, what I'm trying to say is, whatever strategy that you're trading, let's try to do refinement to the minor things in terms of execution and risk management. Paul is asking, can someone pass a funded account for another person, especially for the next and Fivers? Yes, you can do that. But one thing I'll tell you for sure is, if you're trading for someone else, prop firm, and there's the aspect of the IP address, especially funded next, leave alone the Fivers. They're so keen that so it can mess up with you, but you can do that. But why can't you just buy your own prop firm and grow from there? You can get a prop firm with as low as 5,000, 6,000 Kenya shillings and trade that. Guys, believe in yourself as you're learning. Just believe in yourself. Start from wherever you are. You don't need to start trading millions of money. You can learn the skill, be good at it, and start small and grow. Because you can start trading even the 100,000, $100, whichever amount of money, and grow from that. Especially when you're new or when you're growing, it will teach you a lot of things, right? But still, Paul, can still trade for other people, make money, start from there. Okay, I think, guys, up to that point, I believe we've gotten what you're looking for this week. We'll be sharing updates in those various groups that we are. Kim has his group. I also have my own group, especially my focus right now is so much on Discord. I'm trying to, in fact, very soon, we'll not be doing these Zooms. I'll be doing all the live streams and everything on Discord so that we have all our enclosed values there together with the members of the community as time goes by. So you guys have a lovely night. I'm going to upload the recording on YouTube. I'll share the links across those groups, and then you can also go and watch it for the learning purposes, as well as to follow through the updates that we're going to be having on week and days, as days goes by. You guys have a lovely night and have a very peaceful week ahead.